right, ladies and gentlemen, welcome back to another episode of the Passive Cash Flow podcast. I'm your host, Aaron Fragnito, and we have one of my good friends and a man I've been doing business with for many years now, Marty Chera here on the podcast today. How are we doing today, Marty?
Hey, great. Thank you, Aaron. How are you?
Excellent, my friend. Excellent. You know, I wanted to have you on the show here because not only are you a mover and a shaker in the lending industry, and I've been impressed with how you've built your company from the ground up over the last 8 years or so. I've kind of seen you running around. We met at the auctions originally. You're not afraid to hit the pavement and get out there, but you also have a breadth of experience in business in general, marketing and branding, and just developing a good system here. So I want to talk to you about that, but also the macroeconomic market right now, the situation with interest rates and home prices. I know you're an investor, you're a lender, you're a business manager. So Marty, if you want to give yourself a little introduction here, that would be great to let the people know who you are and what you do.
Great. Appreciate that, Aaron. So my name is Martin Chera. My company is Express Capital Financing. We are direct lenders nationwide. Started the business back in about 2014, 2015, me and my son, David. And then a few years after that, my son, Max Chera, came on board. We specialize in fix and flips, bridge, and then, a few years after, we expanded our products to debt service loans and commercial bridge as well. I used to be a broker when I first started out, knew nothing about the business. I just started it out somehow. Like you said, went to auctions, went to all meetups, Chamber of Commerce, Rotary clubs, met everybody that I can, build up my pipeline of people, and just eventually, after a few years, I proved to banks and where I get my capital from, what I could do and what I could offer, and obviously the investors behind me to have a successful company.
Interesting. Wow. And it's, there's no shortage too of competition in that space, now when you started this business and, a lot of people look at starting a business and they say, oh, there's other companies doing it. There's too much competition. But I guess, in 2014, there's a little bit less, but still, there's always been a lot of, lenders around there. So how are you able to kind of eye down the competition and figure out how to carve your niche in that pretty competitive industry?
Great question. I tell my people, you could fly on Spirit Airlines for $50 to Florida, same destination, same sun, same trees. You're going to go on $350 with Delta or some other airline. What's the difference? On-time departure, on-time arrival, free baggage, free potato chips, free water, comfortable seats and things like that, where your $50 comes out to $200, $250 eventually when they, hate to say the word, when they nickel and dime you. But I'm all about that Delta experience, which is service, reliability, certainty of execution to close. Credibility is very important. So I don't know if it's just my investors, my clients' capital and money. I tell them, is it a good deal? Is it a bad deal? Why is it a bad deal? Or why is it a good deal? And that's what I'm all about, because any broker, any lender, or any bank can provide you with money, but if they're able to be your second set of eyes, your back office support and all that, and tell you where the deal makes sense, where it doesn't make sense, that's what I'm all about. Because I want that recognition. I want people to know that I'm not just a lender. I got their backs.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Yeah, absolutely. It's funny. When I first got started in real estate, I looked at lenders and underwriting my deals as like a hurdle I had to get over. I had to get through the underwriting from a lender. But after I've done hundreds of transactions and dealt with dozens of lenders, I've realized they're actually your partner and they're underwriting your deal for free, essentially. There's application fees and things, but for the most part, a good lender is going to underwrite your deal and tell you if it makes sense or not. And of course, if it does, they'll want to lend on it. If it doesn't, they'll tell you why it doesn't make sense. And some of the worst deals I've done, the lenders, the first few I came to said, it's not a good deal. There's not enough meat on the bone. Don't do the deal. I was a thick-headed young entrepreneur, a real estate investor. And I just kept shopping around for lenders to eventually who were going to fund me, who didn't really, care as much about the deal. So it's really, really important people understand that a good lender is going to give you great advice and underwrite your deal essentially for free, in a sense. You're getting almost a free service there. So, it's frustrating. People say, oh, lenders are jump through hoops and paying interest. Yeah, but at the end of the day, you're kind of partnering up with them in a way, with them underwriting the deal, bringing the majority of the capital and so on. What are some of like the underwriting standards you'll put a deal through when someone brings you an opportunity?
Yeah. So, I just want to add to that, by the way. So not only does a lender have your second set of eyes, they are taking the most risk. Whether it's a fix and a flip with 10% down or a commercial bridge with 25% down, that lender is taking 90% of the risk, especially when you have CapEx components. So yes, getting a free underwriting experience is good to have. And to answer your question, what are we looking at? So we are, most lenders are looking at the character of the person, the experience, the credit score, and his track record. And I'm not just talking 1 to 4 is fix and flip, because I do commercial bridge as well. When a borrower comes to me and they want to buy a $10 million building and they lack the experience to do that CapEx or rehab of $2 million, that's not something I want to lend to. So we're careful with that too. So experience, credit score, track record, their personal financial, to make sure they have the capacity to go into a closing with that down payment, the closing to carry the monthly payments, the taxes, the insurance, our monthly payment, and things like that, and that they can execute their CapEx or rehab, whatever type of project it may be. So that's that. I'm going to give a quick story, Aaron. One time, one of my borrowers was coming to me for a debt service loan, which is basically, it's similar to a hard money, and it's a 30-year perm, 30-year perm on a 1 to 4, or whether it's a commercial property. And we also do a market analysis. If they ask us to do it, we'll do it totally free. And my office guy did a market analysis, and we found out that there was going to be a warehouse opening up across your street from this SFR, single family rental. And I told the guy, look, in about 6 months to a year, there's going to be a warehouse opening up. Whatever rent you think you're going to be getting is going to be much lower, because who wants to live with 20 trucks coming in and 50 trucks going out, and all kind of hoodlums, in this warehouse across the street from the property?
Yeah.
So you're going to get a lower class of tenants and probably a lower class of your rental income coming in. This is the expectations you need to come into. He decided not to go forward with the deal because of our market analysis. And this is what we do for our clients, investors, and sponsors.
Yeah, well, that's a smart investor then, and that's what I've learned to do now. And we work with a lender on all of our acquisitions. What's interesting too is now on our smaller acquisitions, though, we work with private investors, private capital sometimes, which normally don't have the same underwriting standards that a hard money lender is going to have, or a more actual lender is going to have. A private investor or a private lender tends to be just a simple high net worth individual that you have a relationship with, and they'll invest in the property just like a bank will, be in a first lien position, earn an interest rate, maybe some points at closing, things like that. But for the most part, they don't give you the underwriting that a lender will give you. Now, of course, the benefit of it is maybe they're a little more negotiable on terms and things like that, and the amount of capital, their LTV. But there is really a nice benefit to working with a real lender there who's going to actually really underwrite the property. And quite frankly, you don't walk into this business and get the types of private investor relationships that we have access to now to fund our deals with the kind of those more attractive terms. So, getting started, you do have to go with a lender, and it is a big help to work with a lender like yourself, who has so many years of experience investing and lending to people. But let's break into the investment side of real estate, because not only are you experienced with lending, but you also invest in real estate yourself. You have years of investing in real estate. So with your investor hat on, what are you seeing in the market right now? The talking heads are saying, 6 months ago, everyone expected a market collapse. And now we're saying, well, maybe it's not going to be that bad, and maybe we'll skirt by and then pick up again in 2024. So, man, if you were listening to the talking heads, you would have sold all of your real estate 6 months ago. Luckily, I didn't.
Yeah.
Mean you were smarter than that. But what are your thoughts right now on this wacky market we're in?
So just to go back a little bit, to backtrack, nobody ever expected a worldwide pandemic. So we experienced for the first time in our generation, in our lifetimes, whether you're 10 years old or 50 or 60. And with that said, it wasn't just, in the United States, it was worldwide. So everybody had a fear And that's when, thank God, our government gave us money, whether it's to pay your mortgages, your rent, keep your business afloat, your payroll afloat, and things like that. But when the government flooded so much money into the economy, it was just expected to have what we have right now, which is, inflation, what it is right now. With that said, it's expected. Rates are, yes, somewhat high now due to the inflation, but I've been doing this since I was like in the early 20s. So right now I'm 58 and doing it for about 30 years. I used to do the fix and flips. Wasn't any hard money then. At that time, it was like American Express, Centurion Bank that just, you wrote out a check for the entire amount of the property and you pay the interest rate, whatever it was at the time. Now, thank God there are hard money lenders out there. But the point I'm trying to say is that when you have different lenders and your capacity to grow your business, and now in this case, it's real estate, you want to be acclimated with many lenders, many title companies, and this, service providers, whatever it may be. And to air what you're saying, yes, I'm an LP, a limited partner with one of your deals, and I'm happy to say we built up a relationship. We met each other years ago. I came to some of your events. I believe you spoke to one or two of my events. You have to know the people that you're getting into bed with, whether you're a limited partner, a general partner, a lender, a sponsor, a borrower. So always know the people that you're working with will make you successful. But the rates are what they are right now. Nobody's getting, a lot of people not getting used to it. My prediction is going to be this way for a good, one more year, 2023. And then things will start to simmer down in 24 when inflation goes from, whatever it is right now, 8-9% to more stabilized. I mean, the Feds wanted to be, I think 2%, something like that. But if we get to a normalization of 3 to 4, then hopefully we should be at a good rate market.
Mm-hmm. Yeah, and I do feel like inflation is slowing down. I mean, the numbers show it as well. The crazy thing is we had so much inflation from last year. When you just take the prices now, they are what they are. They've been this way now for 6 months, but you look back and say, wow. So your prices in December of 2022 compared to December 2021, yes, they are like 8% higher, but it's not like I feel like there was a big growth of inflation in 2022, and it kind of started to tap down towards the end of the year. You look at gas prices, that's a very good leading indicator of inflation, right? We use gasoline to transport all of our goods and everything, right? Such a big factor in inflation. So it's scary when gas is at $5 a gallon, right? I always like the movies by Ayn Rand. Where basically I'm forgetting the name of that book where how can I forget the name? Atlas Shrugged, right? So in Atlas Shrugged, the bureaucrats, make it too hard to do business, and gas is really expensive, and all these regulations, right? It reminds me so much of our current administration that, gas goes up to $40 a gallon, right? And because of that, basically the economy is just devastated, and it would devastate our economy in reality. So it's scary when you see gas at $5 a gallon, because if you've seen the movie or read the book or just, inflation is a scary thing when it rears its head. I didn't live through the 70s, of course, but I know interest rates went up to 18%. So the first thing people were saying when rates started to go up was rates are going to go to 18%, because it's fun to say the worst case scenario, and you probably get more clicks on your article if you do, right? So, but it's been...
I'm sorry, rates were not just at 18% in the 70s, also in the 80s. Mm-hmm. It was that way too. Mm-hmm. But you ever watch an old movie and you see in the back, in the background of a movie, the gas was $1.50 and all that. Mm-hmm. So the next generation, 20, 30 years, is going to look at our gas prices in a movie and see, $2.50 or $5 and say, holy crap, it was cheap then. So everything to me is relative, not just to me, it is relative.
Yeah.
Because prices on property 30, 40, 50, 100 years ago was also relative at the time also.
Yeah. Sure.
Right now I'm seeing the statistics that are about rent growth. I mean, last year in 2022, rent growth was, an average of about 16 to 18%. Now it's about 4 to 6%. Average price growth on a value of price of last year was about 25 to 40%. I don't know what you saw, but that's the, some kind of, statistics that I'm getting from last year, but now there are simmering down. I don't think there's going to be a crash because there's too much money out there still, and there's too much equity in people's homes.
Those are great facts, and also the inventory, right? Because it's supply and demand. It's basic economics. And there's not enough inventory. In New Jersey, there's 3 months of inventory right now. It was at like 2.7 beginning of Q4. Now, a quarter later, it's at 3. So it's ticking upwards. But a healthy market is 6 months of inventory. A seller's market is when you get over 6 months of inventory. So we're halfway to a seller's market inventory wise, right? And I got started in real estate in 2010, and I remember what a lot of inventory was like. I remember what it was like to try and sell a home in 2010, 2011. You'd list a home on the market, literally no one would call. And I try to price it right, look at my comps, I price it right, and then no one would call. Go to the seller, we got to drop it 5-10%. No one will call. Go to the seller, 5-10%. Eventually, they're like, "Yeah, I don't want to hear from you again." And it was a tough time. A lot of difficult conversations with sellers as a broker. So now, I look at this market, I'm like, come on, guys, it's not that bad. If you lived through 2010, 2011, 2009, you saw what was going on then. This is like, well, hey, just keep your cash ready to go, because if deals do come out, it's still a healthy overall market. So you have inventory that's low. Low inventory means higher prices. So I think that's going to keep prices relatively strong. And then you also have unemployment, which is at 1.7 jobs for every unemployed person looking for work or able to work. So there's literally 1.7 jobs for every person who's able to work. So even if all those lazy people got up and got a job tomorrow, there'd still be 0.7 jobs available that are unfilled, So that just increases wages more. So you have a strong job scene, strong economic scene there. You have a really low inventory. And, quite frankly, if you didn't sell your home over the last 2 years, you're probably just going to sit tight and kind of wait till 2024, unless you're, there's a foreclosure or a bankruptcy, or you have to sell or moving for a job or something like that. But that's not really enough to just flood the market like we saw with the foreclosures around 2012, 2013, kind of the aftermath of the recession there. However, the most money I've ever made in real estate was in 2016 and 2017, when those foreclosures came to the chopping block at the share sale auction. And Seth and I were there with $100,000 certified checks in our pocket, where I met you, right? We made $1 million in those 2 years wholesaling real. Man, oh man, those years were great.
Right. What do you see the statistics on foreclosures right now? Because I see it increasing. I just forgot the percentage wise. Do you have any idea what it is?
Off the top of my head, I don't know that number. It's not like incredibly scary though. It's ticking up. There's definitely more foreclosures. The foreclosure process in New Jersey, at least, is like a 2 to 3 year process in reality. So, they say it's 1 year, but I never see them get done in 1 year. So it's kind of a slow process. There's a lot of opportunities to fix the problem along the way, sell the property, renegotiate with your lender, right, loan modification. So banks want to avoid foreclosure for the most part, as you know. And so I do think that it's not like that tsunami of foreclosures we saw in 2012, 2013 that led to a serious continued dent. Well, really, it was from like 2009 to like 2014 or so, just foreclosure after foreclosure after foreclosure. I don't see that happening. The statistics don't really look like that either. I know bankruptcies are ticking up. I know foreclosures are ticking up. But we just gained 30% of home value in the last 2 years, 2.5 years or so. So, one of the big problems back then was you didn't have equity in your property. So if you fell behind on your mortgage, you lost your job, whatever the scenario was, you couldn't sell your property. You had to do a short sale, and short sales took 9 months back then. And a lot of realtors didn't know how to do it, which allowed me to sneak into the market and learn a niche and just crushed it. And, but you couldn't sell your property. You had to do a short sale. It slowed down the market. It causes additional headaches. Now you're in foreclosure, but you have equity in your home. You call People's Capital Group. We come and buy your property. Bada bing, bada boom. You're out of foreclosure, right?
Yep. Somebody's pain is somebody's gain.
Yeah. Well, that too. But when you have equity, in your property, you're going to sell it. If you're in foreclosure, you're going to take your cash. You're going to go rent a property. You're going to go rent one of our apartments.
And at least you're giving them some, a cash offer versus a short sale or a foreclosure, hurting their credit and having, a negative equity. So,
Yeah. Yeah.
so that's where it helps.
Yeah.
Yep.
So,
Yep.
and that's the main difference, right? If you're in foreclosure now, but you have equity in your home because you've owned it for at least 2 years or so, even a year, you should have equity. Then yeah, you're just going to sell it. You're going to, maybe you lose a few bucks, you break even, you pay the realtor, but at the end of the day, you're going to walk away with a little cash and move on. When you have negative equity, that's when people start living in their homes for 3 years, not taking care of them, whatever. And you go, and they'd say, screw it. A home's worth 300,000. I owe 400,000. I'm not paying 100 to the bank, and I'm not getting stuck with the difference. I'm just going to live here as long as I can and not cooperate with anyone, because you're in a really tough spot. And that's where we ran into all those problems and foreclosures. And we are nowhere near that right now.
Nowhere near that. But also just my thoughts are, Aaron, is that the foreclosure increase, again, my thoughts is because of the backlog from this pandemic of 2020 and 2021. Mm-hmm. So I think the courts opened up in early 2022, if I'm correct.
Mm-hmm. Right? But that's a good point. The courts are very backed up.
Finally hitting the market now. Like I said, it's about 2 years for Jersey. So whatever we're seeing now in late 2022 and 23 is because of 2020 and 2021. Mm-hmm. So, however, there's going to always be people in distress, whether they just can't afford the mortgage, they didn't anticipate something happening, divorce or death or whatever it may be, and that's going to cause somehow more properties to come up, whether it's foreclosure, pre-foreclosure, or just a distressed property.
Yeah. And jobs, right? Jobs are so important. In 2009, if you got fired and you were underwater with your home, you really couldn't find often the matching job. Maybe you're making $100,000 a year in a white collar position. A lot of those people ended up going and flipping burgers for a few years, and those are the scary stories that everyone, couldn't sleep at night because they said, well, shit, my neighbor is flipping burgers at McDonald's. He was, the CPA at a Fortune 500 or, those scary stories. Now, you get fired from your job, you're probably going to go get a job that pays you more money, and it's the great migration, right now. I talk to my friends, if they're not happy where they're working, they're going and finding a job for a better pay, better benefits. It's incredible, so that's a very different scenario too, than we saw in the last Great Recession there. And that's going to obviously really help us move, I think, forward and through this without a huge hit. Now, are you seeing on your side the appetite for borrowing? Is that slowing down a bit?
Am I seeing the appetite for borrowers? It's 50-50. This is all an emotional game right now. If you have to have that mindset that the rates are what they are, whether you're going to a bank, a debt service lender, wherever you're going, the rates are what they are. And if the deal still makes sense, and you're still cash flowing somehow, then why not do it? Because in 2 years, 3 years, 1 year, when the rates go back to normalcy, your cap rates will be better, your cash flow will be better. And when your values of the property go up in that 2 to 3 years, you're going to cash out again. So you're going to have a few advantageous points of a lower rate, cash out more, and a better NOI. So to me, it's a no-brainer. However, people are feeling at 50%, I'm going to wait. I tell them, hey, do you want to be 50% of waiting, and you could be 100%, it's going nowhere but the same, or you could be 50% where it's going down. So it could go 3 ways. It could stay, what do you call that word? Status quo. It can go higher and it can go lower. But the people that want to wait, they're just, so real estate, you have to buy real estate and wait. You don't wait to buy real estate.
That's nice. I literally said that to 2 people already today. So thank you.
That's a big.
Not to you.
And I heard a famous quote also, you got to spend time in the market. You don't time the market. You spend time in the market. So even if you're not ready, spend time in it, start shopping, looking over the neighborhoods, the comps, the statistics, the schools, the taxes, study the market so you could be, ready to go, whether it's your first deal or your 100th deal.
Yeah. It's funny. I remember speaking with an appraiser at a property in 2016, and he said, sell all your property this year. It's going to drop next year. Forget it. Drop. Next year's done. Spoke to another appraiser, or I think it was a broker in 2018. He was saying, sell it all now. It's destined to drop heavy next year. Forget it. Pandemic came, right? Get rid of your inventory. Real estate's not worth it. You're going to lose. It's going to drop like a stone. last year, the same thing. It's just so they're always saying, I had an appraiser appraise one of my properties one time. He came in at 235,000. I wanted to rip the guy's head off. It was such a low appraisal. I sold the property a few months later for 450,000. And I wanted to call up that appraiser and send him the appraisal there. Like, can I get your mailing address? I have something to mail you.
You should send him the before and after, your new numbers and his numbers.
Yeah, he's so wrong, So of course that buyer fell through. Actually, that was a refinance. I was trying to refinance the property, and then I ended up just selling it because the refinance appraisal didn't come in properly. This is like, I'll just sell it, and I got 435 where he appraised at 235 or 450. I sold it for 450. He appraised it at 435. So just very, very frustrating. Just goes to show. And this guy was telling me he's the biggest appraiser in the state. He knows everyone. He knows everything. He knows what the future holds. He's the smartest guy in the room. And, I completely underpriced the property by like 50%. Just a dope. So, and it's so interesting how you find so many people who really don't normally own a lot of real estate. Maybe they're going to sell it for you. Maybe they're going to appraise it for you. Or work around, but they're telling you how to own your own real estate. And you're thinking like, man, if you were so good at owning assets and so successful, why are you the one working for me? And, so it's really interesting. You can always find someone who's a naysayer, always, talking head who's going to tell you what you want to hear. The smartest thing I've done is not listen to those chickens without a head running around saying the sky is falling. And again, not waiting to buy real estate and wait. One time there's a building I was negotiating over $5,000. I wasn't going to do the deal. I was like, no, I need my $5,000 off. I didn't get the $5,000 off. I ended up doing it anyway. I was like pissed about it. That property appraised for $400,000 more than I bought it for, just about a year ago after owning for about 6 years. So that would have been so short-sighted to throw the deal away for over $5,000 to lose out on $400,000 of long-term equity growth over the next 4 or 5 years. So just a really incredible opportunity there. But it's so funny. You look back on real estate, you want to be long-sighted, not short-sighted whenever you're investing.
That's true. And you can look at any property, any city, any state, your street, your neighborhood, whatever it's worth today. If you go back 10 years, 15, 20 years, you'll see it was worth much less. So it always increases in value. You may have a tick in the market, but it always increases over time. It just never decreases and stay there, Right. And, and like stocks and bonds, it's, you could lose your money overnight, but with real estate, you may lose your money in a day, in a week, or in a month, only if you sell. But if you keep it, you'll never lose. Yeah. You'll never ever lose,
Yeah, my attitude is never really sell. If we do sell, we're going to 1031 into a bigger property too. That's a good way to sell, defer all taxes, trade into a bigger property. That's a great tax tool to build your wealth exponentially in real estate. And I have plenty of podcasts about that as well. But it's really, never sell is a great strategy. Seth and I always joke about how we wholesaled 100 properties in that 2000 to the 18, period there. And we always say, wow, imagine we just held on to all those properties, went to a lender like yourself here, bought them, fixed them up, rented them out, refinanced back the money, and held on them as rental income properties, and a lot of smaller, 2s and 3s and singles, but hey, would add it up into, another 100 units. And it'd be worth probably about maybe, 100% more at this point. The growth since that time has been phenomenal. So, we cashed out nicely on plenty of those to get a quick fee. But, after pay the tax man and everything else, it's nice. But man, there's nothing like long-term wealth and cash flow, tax write-offs at the end of the year. Yeah, there's some management headaches, but we have a nice management company in place that allows us to own property much more easily and effectively. So it's really what I've learned through the years is transacting real estate is nice and all, but if you just own it, buy real estate and wait, just manage the right way, own it. Don't even put a ton of money into it. Don't break the bank renovating it. Keep your renovation costs modest, update it as time goes on, as tenants move out, but just maintain the thing. Don't, put too much into it. But I've found some really, incredible passive wealth is just the best feeling too.
Like Mr. Wonderful says, cash flow. Cash flow. Yeah. And that's what real estate is all about. Listen, my dad, may rest in peace, he always told me, he goes, never ever sell real estate. Never. He was he had quite a few properties and he was cash poor, but he had a lot of real estate. When I got married at 21, 22, he didn't have $1 to get me married. He had to sell one property to liquidate, and he did it. And he was sorry he did it because, yes, he gave me, money to get married, but the other remaining money, he blew it. And that's what he says. He goes, cash is good. If you're investing it, money should work for you, but just to have it 100,000 in your bank and it's doing nothing and you're buying cars and boats, that's the most foolish thing any passive investor could do. Foolish.
Mm-hmm.
So it has to work for you, and how it works for you is cash flowing. And like you said, real estate increases in value over time.
Yeah. And that's the other thing too. Yeah. When you do sell, not only do you have to pay taxes, but now you have that cash, you got to find something to do with it, and normally you don't really invest it as well as you had it invested. A lot of times, some of it goes, to me, I like to buy motorcycles, or things like that. And it's just like a terrible use of your money, or travel. It's fun. You want to enjoy things. You want to enjoy your money, enjoy your life. But at the same time, the more liquid cash you have laying around, the more it just goes to useless liabilities, usually not building your asset class, unless you really have great self-control on that. But by owning a bunch of real estate and being equity rich and cash poor, which I know all about, it forces you to kind of be smart with the cash you have. Look at cash as just as a tool to get more cash, and then also when all your money is on paper, the banks like that too, because it does allow you to get more loans, as well, and raise more capital. But when it's on paper and it's tied up in real estate, not only is it growing with inflation as we renovate the properties, as market grows as well, but I also can't spend it. It's not sitting in my bank account or sitting even in a high interest savings account or something. It's too easily accessible. So it forces you to not spend it because you can't possibly spend it. So then you also have the refinance strategy to harvest some of that equity growth, which puts you back in the same spot of having a bunch of liquid cash that you need to be smart with and not go to Disney World, but actually buy more real estate,
Yep.
Yeah. Maybe a little Disney World, just like a short trip to Disney World,
Yep.
That's how good a year you had. But Martin, I really enjoyed this. It's been a great chat with you here. How can people contact you and learn more about your company?
So main number is 718-285-0806. Company website is expresscapitalfinancing.com. And just to recap, we are, fix and flip lenders, commercial bridge, and we also debt service lenders for the permanent non-bank lending as well.
Awesome. Excellent.
And we're looking for joint venture opportunities, whoever's looking. So we could be an LP, co-GP for other future co-GPs out there. And, if you don't mind me saying, I'm an LP with you. We just started our first deal with you, and hopefully it grows. Mm-hmm. And that's what we're looking for, to build relationships.
Awesome. I love it. Great stuff. And also on our side with People's Capital Group, of course, we're always buying apartment buildings here in New Jersey and helping people invest in those buildings with us so they can earn cash flow and tax depreciation and large lump sums upon the refinance. So we focus on New Jersey strictly here. We have an in-house property management company, and we've been doing this about 10 years. So if you want to learn more about how we help people invest in real estate and our upcoming opportunities, go to peoplescapitalgroup.com. We have over 120 podcast episodes there. We have over 25 webinars as well. In fact, I'm going to be doing a weekly webinar coming up for the next 2 months or so. Usually Thursday at 11, we're going to be going live, but those will also pop up back on our website afterwards. But that all starts at peoplescapitalgroup.com. And of course, we have an event January 10th. So that'll be right after we air this, actually on this Friday here. So we'll be having an event in Somerset, New Jersey, January 10th. So check that out, and you could learn more about that at peoplescapitalgroup.com. Thank you so much for coming on, Marty. I'll put your website in the show notes as well, so people can get in touch with you there. And one more time, what's your website?
expresscapitalfinancing.com. I just want to add, Aaron, for the investors out there that are looking to get started, you could learn only so much. You need to jump in the pool. You need just to get your feet wet. Are you going to make mistakes? Yes, and that's part of the process. It's okay. Nobody who's a millionaire or billionaire today ever just made it from day one. So you're going to make mistakes, and it's okay. And a smart person will learn from their mistakes. However, if you just have the capital and you don't got the time or the patience, being a limited partner, an LP with people like People's Capital Group is a great way to, to have your money working for you, which is that cash flow and the internal rate of return, which everybody's looking for.
Yeah, absolutely. Internal rate of return. We could do a whole podcast on that too.
I'm ready, baby. I'm ready. I'll do another one with you. I like that one.
That'll be a little dry, actually. Excellent. All right, Marty. Thank you so much, my friend. We'll talk soon.
Thank you. Have a great day.